Hello. We are back again. How is everyone doing? I am Victor. How are you doing today? Let us know in the chat. Today is the 23rd of December. It is the holiday season. So if you're watching us, thank you for tuning in on the holidays. I hope you guys had a great weekend. Great weekend. I see we have a couple of traders in the chat, namely Cash, Vance, and many others. Great stuff. Keep on coming in, you guys. Today we have a great session for you. I will be your host. Jonathan is sadly not available today, but I will be your host for the first hour. We'll be talking about market analysis. I will answer your question, anything you have, and we have a couple of announcements to make for those who are still not in the know. We have some things to share with you as well. And at the end of the first hour, Michael Catz, from the CEO of Trade the Pool, will take over, and he has some exciting things to show you guys. He's going to be showing his scaled up account from to 320k hyper growth. So stay tuned. We have a great show for you today. So let's start. We see who else is with us. We see a number of traders. I'm excited as you guys. Yes. So let's start. Let's look at the at this week, right? I'm going to go through an overview of different pairs and show them, what are the outlook for this week. We talk a little bit about them and the news, what we can expect from this week. Let me show my screen. I see we have many in the audience. Great stuff. Abdullah, thank you. Thank you for coming in. Lopez and many others. Keep on coming in, guys, and don't forget to hit the like button. If you like our stream, if you think we are doing a great job at delivering value to you as a trader, hit that like button. Show us your appreciation. Subscribe to our channel and support this initiative, this group, this project we have for you. All right, so I'm going to show my screen, and this is, of course, the EU, and yes, it is being shown there. Let's see, but before we do so, let's get to the news of this week. Of course, we have a short week because it is holiday. It's the 23rd of December, so as you already know, the market is closed on Christmas, so it's there's no trading possible. All the brokers, the market is closed, so there's no possibility to put on any trades. But also the 26th. The 26th is a holiday in many countries, as well as the second day of Christmas, right? It's a bank holiday in Europe and many other countries. So the market is open. But keep in mind that that many participants, it's holiday, many participants will not be there, so the volume will be quite low, just to keep that in mind. But let's start with Monday. Today we have CAD news, high impact, GDP. We can look at dollar CAD on the screen to see if they are before the news and during the news, if there's any trading opportunity or how the market looks. Other than that, there isn't anything else, right? There's that orange folder, consumer confidence on the US dollar. And as you can see, on Tuesday, we have a couple of news coming out, mainly in US dollars, but they're not high impact. It's not surprising because, of course, it is holiday season. There is a yen news, a government speaking in Japan, so the Bank of Japan governor. But the market is closed completely on the 25th. So whatever that speech causes, we'll only be able to see that on the following day, on the Thursday. And on Friday, we don't have basically only a small or a medium impact news on yen. So this week is going to be quite low volatility. or as you see, low volume. Low volatility is also the case, but only if there isn't anything big happening. Sometimes during holidays, because of the low volume, you can have an increased range, but usually with the lower volume, there is also a lower volatility and a lower range, compressed range, and we can talk all about that when we start looking at the charts. Before we move on, I would like to show you guys the actually, let me see. I think let's see. I believe I wasn't sharing the tab that I was talking about. So let's see. What we have here is this is the news for this week. I was talking all about that, but I forgot to share that. So this is what I meant with the holidays on the 25th and the market being closed. But on the 26th as well, being a holiday. What I wanted to show you guys is this the trading hours for the 5ers, right? So it's important. If you have a trade open, and let's say you're a swing trader, and you're considering, should I close it or not? And maybe you do want to close something right at the end of before Christmas. Keep these hours in mind, because the market will be closed for the 25th. And it's important. If it is important to you, then it's important to know when each market is closed. Basically, all the assets will not be able to be traded on the 25th and the 1st of January, except crypto, of course, which is open as usual. So that is what I wanted to show you guys. Let's see. We have. Let me change is there something about? There you go. Yes. There's also something I wanted to talk to you guys. Very exciting. We have a New Year's trading contest. If you buy an account of any type, any size, on the 23rd till the 1st, between the 23rd of December and the 1st of January, you automatically participate in our New Year's trading contest. And that only by participating already, you are a winner. You get $5 hub credits. And also the prices are amazing. I mean, the first place gets 2,000 cash prize. I mean, can you imagine that? 2,000 just by participating in a contest, a trading contest, doing something you love. It's amazing, right? So, and the contest, by the way, will start on the 6th of January. From the 6th, it's a week, 6th till the 13th. All the rules you can find in your hub credit, in your dashboard, not your hub credit, your dashboard. All the rules for that trading. But that's exciting, man. Anyone can participate. You just have to buy an account of the 5ers. As easy as that. And you also get right away, or not right away, but you do get a $5 hub credit, as I mentioned. So only for that reason already, it pays off to participate. If you don't think you will win the contest, I should say, that already is a great thing. So let's move on to the next tab. There we go. And let's look at the market. But first, let me check the chat. If you guys have any questions or anything you guys wanted to share with me or share with the group. Let's see. We have the sound is a little low, says something. So someone. I'm going to put the mic a little bit closer. Is it okay for now? And is everyone able to hear me well? Let me know in the chat so I can adjust accordingly. Let's see. We have many people in the audience with us. Someone asking about psychology, how to fix my psychology. Yes, keep this question in mind, Bhavesh. We will start discussing this shortly. I'll pick a couple of questions and we can discuss this. But if there's anything, psychology is quite broad. So if you want to discuss anything in specific of your psychology that you think needs fixing, let us know in the chat. I will be on the lookout in the chat to see if you have a follow-up, a more detailed question, because I know there's many direction we can go with a psychology question, and how to do that better, how to improve that. So let's see, what else do we have? We have someone, Evans is with us today as well. Someone asking about my glasses. The way I do it may not be so interesting, but the way I do it, I have to have my glasses a little bit further out than normally. That's why when I tilt my head down, it looks like, it looks like there's more distance between myself and my glasses. But it's that's the way I do it. Nothing special, nothing magic about it. Just having it a little bit far out than usual. All right. Okay, we have a couple of questions about the. All right, we have someone, Akash, saying on holiday you can look at yen pairs. Okay, so Akash saying we could be doing, yes, yes. Today I'm doing the first hour by myself. Sadly, Jonathan is not available today, but rest assured, I will do my best to accompany and give you as much value as is possible. Let's see. All right, good stuff. I have there's more messages in the chat than I can read, so I'm going to quickly skim over it. Otherwise, we will not be in time. So let's see what we will do is look over different pairs: euro dollar, the pound, the dollar yen, and also the dollar CAD, the Dixie as well, and look at very simple, very quickly, what are the levels where we can be looking at, and if there are any opportunities in the market right now. Let's see, on euro dollar, what do we have? We have, of course, on the higher time frames, we have a big, a huge, I would say, not only big, but a huge structure, which is the weekly quasi, where this is the head and this, or either the other previous being the left shoulder. If that is, if we see it in that perspective, then we can assess, or we can consider that this area, the current area we are right now, is an entry order block or an entry area on the weekly time frame, right? If that is your way of looking at the market, as it is mine, then I would be looking for any indication of a reversal from these areas. And we are getting some kind of movement that resembles a bullish reaction, although when we go deeper, right, in the lower time frame, and by the indication I mean that there is a bullish order block that was formed on top of that once price came into that weekly order block, on that weekly entry order block. So that to me tells me that the market are coming in, right? However, that's not enough. That is just one reaction. If you want to actually, catch a reversal, you need to have many more signals telling us that this is going to reverse. Right? So and that hasn't happened yet, at least not on the weekly. We haven't had that reversal yet. What we do have is the market is within that fresh order block that was created from the first time around. It touched the entry order block on the quasi, which is the area below us. That's the first time. From that moment, the order block, the fresh order block was created. And I start to looking, when price comes back to that area, I start to look for that reversal. But we don't have any indication yet. So we are on the lookout for any signs of that happening. If you look at the daily time frame, that also doesn't give us any indication yet. That might, change, in the future, but it doesn't give us any indication yet that this has reversed. I do have this area as a possible reversal area, but it has to confirm yet, right? So the way I see it is there is also a possible reversal happening, but when I say possible, it's an unconfirmed. It did break the neckline, right? But coming back, and it's coming back into a relevant area, which is this huge wide area, not very useful to me. Not only that, it did show us some reaction, some positive bullish reaction, but quickly with the FOMC meeting on Wednesday last week, it broke all those structures that was created with that bullish engulfing that we saw here. So it looks very bearish. It is within the area that could be could offer us some opportunity for a buy. However, it is it's not showing any signs yet on the locally, right? So in recent candlesticks, there is not a structure yet, no market structure telling us that this is switching at all, right? There are some price action that we could look for a long, right, which is of course this outside bar, very interesting outside bar at the weekly entry order block, within the fresh weekly order block, of course, and the daily entry order block as well. So, and this is, the area was quite wide, but this order block, this outside bar happened right there. So that makes this area to be basically the only area on the daily time frame interesting for a long opportunity. Other than that, it looks very, very weak. So I would be expecting price to keep on going lower as long as we don't take out that high. And actually on the lower time frame, as you can see on the quasi, the neckline or the structural limit, the structure is broken when we take out roughly at 105.394. And that hasn't happened yet. And as long as that doesn't happen, we don't take out that level, that 05, what is it? It's, to be exact, it's 05.39.4. As long as we don't take that out, I would expect price to continue going lower. Even though we are in an area of interest, that doesn't mean price will bound necessarily all the time, bounce necessarily all the time. So, but if anything, I'm interested in, if we go to the lower time frames, right? So we are in a very interesting area for a long, but we have to wait for the market to tell us that it wants to go long. And the only area that I see on the H4 is, of course, the same structure, the same candlesticks formation, which is the outside bar, which created not only the daily, but also a H4 order block. And there are, of course, let's see, there are actually, let me go to the H4. No, there isn't an H4 order block, but there isn't a quasi, right? So I'm not looking to go long based on a quasi. It's an H4 order block, which is no longer exactly fresh, right? It's not a mid-single digit number of bars since its creation. So I don't see, I'm going to be looking for buys in this area if they form on the H4 as well, but they haven't done that yet. So in the absence of that, I'm going to sit on my hands. But this is the area of any long position or long possibilities. It's this area that we need to be looking for. All right, let's look at another pair. That's for EU. Very weak. Concluding, yes, very weak. And I'm very interested to see, what structure will it form in this area. That's going to be the question. I think if there is a long opportunity coming in, then it's likely that it's going to happen around or related to this area, either after it touches it or either after a squeeze. But if we're going to see something, if it's going to happen, if not, then we know by how it behaves when it gets to that area. But that's on EU. Let's look at pound dollar. What can we find today? What can we see? Mandeep asking me, do I trade the high time frames? Yes, I do. I do trade the higher time frame, but I start normally on the my trade plan tells me I need to start looking for opportunities on the H4, right? So all my trades have at least an H4 basis for the trade, the setup. Then I go to lower time frame to get my alignment and entries. But I'm always looking at that weekly and daily to see if my trade on the H4 is also a trade on the daily, or maybe sometimes even on the weekly, right? I do want to have that that opportunity. If it presents, I want to be able to catch it as well. So I will upgrade my H4 setup to a daily or even to a weekly, and I'll be using partials to do so, right? So closing as part of the position at TP1, which is based on that H4 structure that I made me enter, and the rest I will leave it for the daily and or the weekly as well. All right, so not most of the time my H4 is the basis, but that's not necessarily means that I go to the H4 level necessarily. I try my H4 areas or setups are on the basically day trade. So I plan to close them at the end of the day or at most the following day, right? So I do take that overnight, but that's not most of my trades. Actually, I want to close them before the end of the day if possible. But if the setup signals, let's say in the last 2 hours of my trading session, I already know, depending on the target, but I already know that it's not very likely to hit target before the end of the day. So I need to give it some time as an overnight, but usually that's not the idea. I want to be out, I want to be flat at the end of the day. Only if I have certain conditions on the daily and the weekly, then I can consider leaving them for more than just overnight and a couple of days, and sometimes even a couple of weeks, right? So not most of the time I keep them overnight, but I do trade them and I do hold positions more than one day, right? So let's look at the pound. What do we see in the pound, right? We do have a structure, a breakout structure on the daily and on the weekly. That's the neckline. So that means that this becomes now the head of a possible reversal, a bearish reversal. And this will be then the left shoulder. And we could be expecting a right shoulder, or at least an opportunity of a right shoulder having some kind of reaction in the market because of this quasi that was created. However, it is at a level, right, that possible right shoulder is not relevant right now, because we are barely, or not barely, we're still in the area of that broken neckline, which is, of course, where we are right now. There is a bullish fresh order block, right? So that could be a reason for me to hold. Coming back to your question, Mandeep, that is a Mandeep. There is a that could be a reason for me to look for other alignment on the daily as well, to hold something for a bigger time frame setup. But it's not enough on its own. If we go to the daily, let's go to the daily. What else do we have? We do have some structures here from the left, and that is a bullish quasi, right? That makes a lot of sense to be looking for this weekly order block, right? Which is fresh. Let's go back to the weekly. Let me make this point. This is interesting because we have an area. Let's look. We have an area here which is a weekly fresh order block, right? Meaning buyers came in, when they created this, and they're likely to come back again. It's not a guarantee, but they have, a good probability of coming back to defend that area, because that was last time perceived as an area of demand, right? So they're likely to do the same. So we could be looking for a long from this weekly order block. And do we have confluence in that sense? Let's look at, we do have a weekly order block, but it's no longer fresh, right? So we can't use that. And we have also for the other weekly order block below, they're not fresh anymore. So they're not very valid reasons to go long based on those structures. However, if we go to the daily, we can see that there is a quasi right here, a bullish quasi or an inverted quasi, or an inverted head and shoulder, you could say, right? Where this is the left shoulder, this is the head, and that would be then the neckline that was broken right there on the daily time frame, and price comes back to some structure, and you can see them denoted here as possible entry on the daily time frame, and we are right there. So in this area makes sense on pound, on the pound dollar pair, as a very interesting area where we could see some kind of buying coming in. We did already have that reaction, right? As price came into this area, that's the entry order block on the daily time frame. Price did have the expected move, which is, you know, buying pressure coming back in, and we have come back to the same area. Now, typically, the more a structure is visited, the weaker it becomes, right? So you have to keep that in mind. If it keeps on coming to this area, then it is likely to break and continue continue lower, perhaps to a lower structure before it reverses. But my rules in any case, what I trade, what I have seen in my experience is that even though this is a second time it comes to this structure, it can still offer you, especially because it's on the higher time frames as well, it can still offer you plenty of opportunity, right? Even on the second, the third, not if it's on the lower time frame as much, but because of this is on the daily, this can offer you easily an opportunity for, you know, another pop. May or may not be higher than the last one, but as you can see, that is still enough. Let's go back before we continue with the market overview on the different pairs. Let's look at the news that was coming out on dollar CAD. This is on the 1 minute. What do we see here? How's that reaction? It was the GDP that came out higher than forecast, right? At 0.3. On 0.3, as it was expected, was 0.2. And let's look at the chart to see if we have what's the reaction. It's been almost 2 minutes now since the news coming out. This is the dollar CAD pair. There was a little, well, not a little, but a 6 pip move to the downside. It could be just the spread opening up. Not exactly, rocket movements by any stretch of the imagination. Perhaps we can, since the news came out on this pair, perhaps we can switch before we continue to pound, look at any opportunities that, any trading opportunity, because of the news, this could, of course, move somewhat. Just to get an idea on the weekly time frame, there isn't any structure of relevance. Price is very bullish, consecutive bigger bullish bars. On the daily, same thing applies. There isn't any break of structure. Any break of structure that I see is all the way much, much lower. Abdullah says he's sleeping from the market movement of today. Yes, that's how it is, but don't forget there can be, because of the low volatility, below the low volume, I mean, the market are more likely or are easier to be moved. So it can be it can still move somewhat, although yes, the expectation is that the ranges, they do get compressed on these days, right? So there isn't anything, the structural level on the daily is way below where we are right now, meaning it's still looking bullish in every sense, any way possible. Let's look at the H4. We don't have any structure relevant. We don't have any setup. There is an order block here that has been already mitigated. Look at that, very nicely moved, but that already happened, and it's no longer fresh. This would be an H4. It's no longer fresh. So I wouldn't, you could expect some kind of selling coming from this area, but that's not enough. It doesn't convince me to be looking for a short opportunity. What else do we have? We do have on the H4, we don't have anything else, right? You can see here that the order block, right, which was fresh, here was taken out without any difficulty, right? So far, it's way past that structure. So that goes to tell you how bullish the market is on this pair. And that's the dollar, of course, dollar strength that is in the centerpiece of these days, and the center place of the attentions of all the market, basically market sentiment. If I were to look for anything bullish here, since the higher time frame is quite bullish, what we see, of course, is an impulsive move up, and so far it looks like we, after having made lower lows and lower highs, it seems like we are ready. You're getting ready for the continuation to switch back to going bullish, and this could be the beginning, right? It's bottoming out to come out the other side and continue its bullish trend that we have seen in the beginning or mid-December. So if that is the case, and that's the expectation, or based on the read on the market analysis, what I would do is look for reasons, an area of demand where I can, participate. And what I see is the only thing we have is this quasi on the highest time frame, which is the H2. That would be then the head, the left shoulder, and this would be the neckline, right? And it hasn't broken that neckline yet, meaning I don't consider the neckline to be here, right? This move was too impulsive, and in comparison, the buying pressure that came out here, to me, I consider this to be just one leg, right? So the neck, that makes this the left shoulder. This is the structural level to be broken, and it looks like it really wants to break that soon. Maybe I think today even, because it's only about 20 pips away. It's only after this neckline being taken out that I can start looking for a possible area where it could come back to in its way going higher, right? So if anything, I would consider this to be on the H2, this as a great area to be looking for a long opportunity on dollar CAD. But right now, I don't see that yet. So we'll have to be patient and wait for the market to show us its hand, right? Does it really want to come back and retest these areas? And if so, then okay, we can. And how do you know? How do you know that? It's by showing on the lower time frames reversals, it's patterns and candlesticks that tells you that you know that the market is trying to reverse. There's someone asking here, Victor, when it comes to the order block, you don't take the wick in consideration. I'm not sure what you mean, but the invalidation of an order block is not done by, at least in my book, it's not done by the wick, right? It has to be the close. If that's the what you mean, and if you want to know the area that I consider to be the order block, then yes, I do take the wick as well as part of the order block. But I'm not sure which of the two you mean. All right, so that's if you have Rascal, if you have a follow-up question, I'll be looking to see if I did understand your question well. Let's see. So that's on euro dollar. So personally, I wouldn't be looking for a long yet. I do see that the market is on the higher time frame, that the market has had this huge impulse, and it is trying to go to reverse and continue to have a continuation, but it's not there yet, and it hasn't reached this order block on the H4 either, although that's not a fresh one, so I wouldn't be putting too much emphasis on this order block, since it's not a fresh one. It's not part of a quasi as an entry order block, so it is an area it could use, but not necessarily. If it reverses before, is just as good. But for the long, there isn't any H4 reason to go long. It's on the H2 that there's a possible quasi information which we could wait for. So if you know this on euro dollar, personally, if I trade this pair, I will not be holding it for very long. If anything, it will be just a quick scalp to the very next level on the lower time frame, and that's it. So I was on the H4. Okay, all right. So Rascal says I was on the H4 order time frame. Okay, not sure which structure you necessarily mean, but these are the relevant structure at the H4. Actually, there isn't a lot. There's only one structure below us, which wasn't retested, and there is this level that is not doing anything to the market. Right, the market didn't respect it, although it hasn't been invalidated officially. You can clearly see that it has no influence on the market. And the other is the area above us, but it's already been mitigated, so it's not something I'm too eager to use. I know market might react bearishly to this area, but it's not something that I would think as a great opportunity to go short. All right, let's go back. So this is dollar CAD, and if it were to had gone to those areas, then we could live on with you. We could be looking for some structure, but that isn't the case. The market just struck those the volatility and just continue to go to the upside, right? Very, very nicely. There isn't to me there isn't well, I don't use, my setups are with high alignment, so I'm not too eager to look for an entry there. I just follow my trade plan, which tells me to wait for those more better areas to look for an entry. All right, let's look back to pound. Let's go back to pound where we were. So I was saying, coming back to the pound dollar, it's quite interesting because we have the weekly fresh order block right here, which is within other structures on the higher time frame as well, on the monthly, which are, let me make them bigger for you guys. This order block, right, is in my book is still fresh, right? I know it has been squeezed already, but it hasn't been invalidated. So it's quite stretched, but it hasn't invalidated yet. And there is another order block below us on the weekly and the monthly time frame. But this one is to me, I'm focusing mostly on this one because this one is the one that's the freshest of them too, right? That's something that could be, make that shift and have a possible pop from the markets. I don't want to say that this is going to happen, but that possibility is there because of those order blocks that are those bullish structures on the higher time frame as well. And if we go to the weekly, we have the same order block. It's not the same, but the same bullish order block, very close to that monthly that was created last month? Well, no, it was a couple of months ago, of course. But on the weekly, we do have a bullish order block, which is very interesting because it happens at the stretched area of that monthly, and it is a valid reason for us to look for a long, right? Because it's fresh. And if we go to the daily, we find that inverse quasi that I was talking about earlier, that this area is a great area to go long from because of what's to the left. And so if we consider those two things, you have the monthly, the weekly, and the daily telling us that if you get a opportunity to go long, you're able to hold this for more than just a few days because of the weekly and the monthly time frame telling you that there's more to this move possibly. And if you go to the lower time frames, they're the same as EU. There isn't actually anything to tell us that moment has arrived where we can start looking for a short. We have a lot of bearishness coming. The market structure is bearish all the way down. There isn't really any sign of a so far. I can't say this is a lower high because it hasn't broken this low, but so far that's the market structure, right? So it's very bearish, even though it is at a great area of demand. So I would say let's wait for the market to show us it wants to, switch back to bullish order flow before we start looking. And there is an order block here, but it's not fresh anymore, and it's not part of a quasi. It hasn't broken any structure, so I would say it is firmly trying to go lower. But it's very interesting to look for buys here, since we of that alignment that I was talking about earlier all this time, right? The fact that we have an area there that's very interesting in terms of the risk and the benefits, right? The potential because of a move. If you can catch something from this area because of the higher time frame, you can target a lot of pips from these areas all the way. This is only 300 going to this level, which is, of course, on the higher time frame isn't much. That's only breaking the structure basically on the higher time frames. Let's show you what I mean. The structure on the daily, right? I'm not talking about the complete reversal. Just by breaking the structure, right? What it needs to reach is this level, right? So you can imagine if you catch a move from there, we're already talking about 200 pips. I'm not even talking about breaking the structure and a continuation, right? And if you have it on the higher time frames, of course, the structural break would come from this area, right? Where it can still come back, break it, come to some kind of a lower area before it continues, right? So if it is going to reverse, this is the very early phase where you can get in, and imagine catching. That's the benefit, the very favorable benefit to risk to benefit ratio that is possible if this is going to reverse, but it hasn't happened yet, right? We cannot, just because of the risk reward ratio, take the trade. There has to be more to it. Market actually we need to read price action, and market needs to tell us it is actually trying to reverse, and that's not happening yet. The structure on pound is firmly bearish, and if that's the case, then we should be looking for shorts instead of buy entries, of course. And on the short side, there isn't much right now. There is only a bullish order block that was created that is still bearish. It's still fresh. Bearish structure here, but it's not relevant because we're not there yet. So there isn't anything where we are to look for a short on the daily, and on the 4 hour. There isn't either, right? So there is a structure here that I identified earlier, and it's based on the quasi, right? This quasi, that being the left shoulder, that being the head, it taking out this low, the neckline, and coming back for a continuation further down, right? If this were to happen, then sure, this would make a lot more sense because of the market structure on and if this happens without the market showing reversal signs, right? Then I would gladly take this kind of trades, because of course it makes sense on the quasi, on the recent price action. It would make sense for a reversal to come in, but if the market is not reversing, we should not be forcing the market to do anything. And if you notice to the left, there is a quasi that was created, but there is no entry order block. That already is a sign of weakness, right? If the market isn't showing an entry order block on the quasi, it is unlikely to be, let me double check if the quasi is already broken on the H4. The low of this is 24.87.2, and the close on here is 87.0. So actually the quasi is already completely gone, right? It invalidated by closing lower than this lowest point. It invalidated this whole quasi. So actually I should take off this neckline and even this line as well, as these are the retracement level on the fib levels, or the retracement level on this being the head, right? This being the head and the left shoulder here, right? And because of the close was below the low of the head, this structure being, it invalidated completely. That's another, I didn't notice that earlier, but that's another reason to, you know, not look for that, be very, very patient waiting for that buy signal, because it's not giving us much to you know, go with if we want to be going long here. All right, so that's a pound. Let's look at the chat. What else do we have? There's Locke asking us on Euro Yen, a pair that I haven't looked at. Let's look at a Euro Yen, 1 hour older, or a fresh order block on the 1 hour. Let's look at that. All right, so very quickly, what do we see here on the higher time frames? There isn't any order block, any relevant or opportunity on the higher time frames, at least not in according to how I trade. That's not a quasi. There is a order block here, but it's not fresh anymore. On the daily, we do have a structure below us, and the next above us is there is a quasi here though. Let me mark this up. As you can see, I do the higher time frame, even though I'm only interested in the lower time frame, that hourly time frame. I still need to have an idea of where the market is, right? That's a broken entry order block, and maybe the whole structure is not very. There we go. Live analysis, guys. Hope you guys, if you have any questions how I mark my chart, how I trade, put them in the chat, and I'll gladly, if time permits, discuss them. Right, so we do have a bearish structure with three entry order blocks, which one was already invalidated. So we do have these two areas for a short. I would be looking, at least on the daily time frame, I'll be looking for reasons to short this on the lower time frame, and either one of them, but we haven't reached it yet. So it's not something we can use for our, you know, day trade. If we go to lower time frame, what do we have? We have some huge impulsive move here, big handle. So the sentiment is for sure very bullish. The order flow, let me see here. There isn't a bullish quasi that I can see on the H4. I'm looking for bullish structures because of that impulsiveness, that volatility that is coming into the market. All right, so we do have a H4 fresh order block that is being tested. We are in a very interesting area there for a long. We have made the move already, though, I should say. I must say, on the H2, there isn't a quasi. On the H1, probably there is, but there isn't either. No, so I can't, to me, there is no quasi here, right to the left. I can see the structure here to the left being a quasi. At least it's not a valid structure. However, I do see how it is, you know, basing out. So I want to be interested, or not interested, I am interested. This structure on the H4, this order block is what gets my attention. And on the H1, there is a structure here where we could have, you know, look for a long when it comes back, meaning that little wick there. You could be have been able to use the alignment you have on the H4 and the H1 to be trying to go long in that wick or something on the lower time frame, but that's already gone, that opportunity. But to the left, I don't see anything, at least not according to my strict rules. What else? You said, Locke, that there is, let's see which. The an old H1 order block. Which one do you mean? Look at a short when it hits an old. Okay, so probably you're talking about this one, right? Are you? There's also this one. Yep. Based on the outside bar, right? Not considering the bearish engulfing. Or maybe you mean even to the left. I wouldn't be looking. If you mean this to the left, I wouldn't be very interested in that one because it made a higher low. Even though it hasn't been confirmed and taken out this high yet, it made a higher low. So I wouldn't, this looks kind of weak to me. See if you're meaning this order block to the left, but the current one is fresh. It is fresh to me, right? So you could be looking for a short there, but on the higher time frame, there is an H4 as well. So, and it's actually outside. It's an outside bar. So actually, there is an entry here to look. There is a reason there to look for a short as well. Yeah. There is opportunity, I would say, for this area to be a short, and the other opportunity was when we retested that H1 order block an hour ago. That was, and since then, and since you have an H4 order block here, I wouldn't be going. If I were to take and trade here, I need a lot of alignment because you are coming from an H4 on the order block, and on the daily, you have a clear target to reach, which is this daily entry order block above us, meaning it can just break and continue. All right, let's look at the chat. We are coming to the end of our first hour. As I said, we have Michael Catz coming taking over the next hour, and he is the CEO of Trade the Pool, and he'll be very excited to show you guys how he scaled his account to 320,000, a hyper growth account that is, and he is eagerly to show you guys his strategies and how he made it, how he did it. So that's going to be exciting. I will be watching as well, although not from as a host, but I will be hearing and making sure to see what he has to share with us. All right, let's go back to have an overview on the dollar CAD. Is there anything happened since we last saw this pair? Continued bullishness. I wouldn't say anything else since we don't have any other structures. Someone asking about the freshness of the order block. Yes, I can surely talk about that before we go. I will try to remember that. Let's see. So before we finish this one first hour, remember we have that trading contest, right? I mentioned about it's a great opportunity. You only have to buy an account with us, from today until the 1st of January. That's the only thing you have to do. Buy an account, any size, any type, and you participate. Right, and you have the chance to win $2,000. That's the first prize, and the second prize is $1,000. Right, great prizes just by doing what you love, trading. Right, and that's separate from, of course, the account that you bought that is offering that potential of gaining up to $4 million in capital to manage. So great stuff, great opportunity. Don't let that pass you by, this contest. All right, let's look at euro dollar while we wait for Michael to come in. But before, perhaps we can do the I can explain this question. Well, Michael D. Pierre, not Michael from Trade the Pool, but Michael in the audience asked me, can you explain what you mean by fresh and not fresh order block, please? Yes, of course I can. I'll do it very quickly because I can see Michael getting ready in the background. Basically, the idea behind the freshness of the order block is the following. because it happened very recently, more traders are looking at the structure, right? So that's the power of the freshness. Meaning, if you, and you can see this, structures that are very recent, meaning from the moment they were created, you count the number of bars, you will see that the market react to them very, very well. And that's exactly what I mean by freshness. When it comes back, it's the number of bars that has been created since the creation of this structure. For example, that's a fresh order block currently, right? And it has been created when this closed, and this is the first bar since its creation, right? So count that number of bars, and you will notice that a lot of the time, the fresher the structure is, the order block, the better the reactions are. So that's the freshness of the order blocks, and I use them as part of my strategy. All right, I thank you all for being and visiting with us, and don't forget to hit the like button. We have Michael in the background that will take over. He will be your host for the next hour. I'm sure you guys will have a lot of fun with him because, I mean, you get a peek, like an inside look into his scaled account. Let's bring Michael Catz to us. You're ready? I suppose you are. Yes? Yes, you are. So here we go. Here we are. Let me bring Michael on. How are you doing, Michael?
I'm great, Victor. How's it going? How you doing, everybody?
Nice. Nice that you can come in and show us your scaled account. I'm very excited to see this. Well done to begin with.
Thanks so much. I've been working on it for a while now, so and I don't have a whole lot of time to trade, as you're probably guessing. A lot of going on in Trade a Pool, and you know, we're doing a lot of projects, so I'm trying to find a way to give myself the space also to trade, because this is obviously a passion, and I want to continue doing that, as well as managing the whole operation here. But so yeah, I'm doing pretty good. I'm feeling pretty good on this funded account. And I actually waited. I didn't take a trade today. I waited for us to have this live trading room, so maybe we will find a trade and we can see that scale. Basically, I'm still missing $400.
I think it's amazing, Michael, and it goes to show. I mean, you are the CEO of the stock trading prop firm, right? The sister account of the 5ers.
Yeah.
And as the CEO, you are a trader at heart, right?
Yeah. Yeah.
And this is this goes to tell us, the people in the audience, that we are, you know, the 5ers is, you know, traders. It's a company of traders offering opportunities to other traders. We are traders. I am a trader. I'm not a streamer or a influencer, which I don't think I am. But I mean, I'm not a host, YouTube host. I'm firstly a trader, and that's what is very nice to see how you handle that account, Michael. I'm going to leave the show in your hands. Guys, you are in good hands. Michael will take over from here. I wish you all the best for this week. It's a Christmas holiday, of course. Next time I'll be on will be on Monday. But stay tuned all of these days, because we have, you know, programs prepared for you on YouTube, even through the holidays. So with that said, have a happy holiday, everyone. Merry Christmas, and you know, happy trading. See you guys next time, and good luck, Michael. I'll be
Thanks so much.
I'm very excited.
Holiday, Victor. Appreciate.
No problem. Bye bye
for now. Okay, guys, so thanks for coming to this basically a lesson. I thought you know, we talked about it here in the office. This is a scaled account to $320,000. I actually, again, missing $400 to actually pass. I'm gonna do that, no worries. But I wanted to share this. We posted on social media, and you guys ask for basically just to understand the strategy and what's going on behind the scene of the account, and how I grew it from the beginning, from basically $40,000, $40,000 as I started with it. So this is great for me to have the opportunity to share it with you, and just to give you my tiny insights of how I did it. I'm guessing every one of us will have his own unique way to trade, and the strategy and the risk management you're applying, but you can learn from anyone, right? So maybe you won't exactly do what I do, but you can take some of the nuances that I will talk about, and you can implement that to your trading. So that could be great, I'm guessing, for everyone. I will try to answer the questions, try to keep them coming, and maybe at the end of the session, I will go over the questions and start answering. If we have guys in the back also in the 5ers, if you can answer questions that you see possible to answer, feel free. And let's dive into that. I will share my screen, put on the charts, and we'll talk about that in a sec. Okay. Give me a second, guys in the back. If you can hear me, I need full access to upload the screen, to share the screen and such. Okay, great, thanks. Alrighty, so just before we'll dive into the charts, a quick introduction. I've been trading for the last 17 years, mostly trading stocks and futures. So I'm well familiar with the industry of both. And I guess, obviously, you have the 5ers, which is a huge company that you can trade indices and Forex with, and also a little bit of crypto and commodities in general. And we as Trade a Pool operate as another company which allows traders to trade a stock equities, basically, of the US market. We have 12,000 symbols to trade with on and ETFs. So for example, I'm going to show you how I traded the index, the NASDAQ mostly, but you can definitely do that the same way on the QQQ, the ETF for the NASDAQ, for example. So for those of you who want to try it also and find a funded account for stock trading, you can definitely go ahead and do that together with us as Trade a Pool. But like I said, like Victor mentioned, I traded the Hyper Growth program on the 5ers, on the MetaTrader, using I guess 99% of my trades were on the index, the NASDAQ 100. Alrighty, so let's dive into that. First thing that I'll do is I'm sharing my screen right now, which is NASDAQ, the future contract for the NASDAQ 100, the biggest 100 technology companies in the US, and we're looking at a 1H, an hourly chart, right? So each bar represents an hour of trading. You can easily see some of the stuff that I got here, which is basically just lines, right? Horizontal lines of support and resistance. I'm not using, like 90% of the time, I won't use any indicators besides this one at the bottom, the MACD, which I will explain and dive into in a moment. But let's just first start with the basic of everything, right? So we got two parts that we can handle here. One is the analysis, right? It could be support, resistance, supply, demand. It could be strategies, mean reversals, pullbacks, could be breakouts, any type of setup that you want to trade. So that's the chart part, right? The analysis part. And the second thing is the part where you manage the risk. And I mentioned that before. I've been on this show many times before, and you can check that as well on this YouTube. I talked about risk management and the way that a lot of the traders, and I see it also on Trade Pool and also on the 5ers, a lot of the traders that making mistakes, they're making mistakes not on the technical parts, or they're analyzing the right chart the right way, but they take in too much size, they take in too much risk right from the get-go. So for example, if I can risk $5,000 or $1,000 or $500 a day, in most cases you will see traders that make that mistake. They will go all in and try to risk the full $500 of that day. Or if your account, if you have 1,000 in total for termination, like the max loss is $1,000, for example, so they will try to risk it all at first by one click. And this is by far the biggest mistakes on the technical level, the biggest mistake that traders will do, just trying to risk the full daily loss or the full max loss on with a one click, right? You will buy 10 lots and that's it. You either make money or lose the account. And obviously it's a huge mistake, and you can easily see that, and I'm sorry to say that there are traders that continue to do that. And this is something that we are always trying to teach and basically just trying to showcase it, where if you do that, you're gambling and you can easily blow the account. Instead of that, you want to build consistency, right? And in order to build consistency, you need to start small. For those of you who are not familiar with Trade Pool, we obviously have our own YouTube channel, and there I'm doing the interviews for our funded traders. So every week we upload a new interview with a funded trader, and they are all saying literally the same thing. They're saying build the cushion, build a buffer, start small, not risking full power at once, and only when you have enough space you can start risking more and more, instead of what other traders will do, like I said, just going in at once and risking the full 100%. So the first thing you can do right now is just change your set of mind. Instead of risking the full 100%, start building it, start risking small. It's about consistency and long term, and not about, passing right immediately the evaluation. Because even if you pass the evaluation super fast, if you do the same action on the funded account, you're most likely to lose it. So instead of that, build your cushion, work very slowly in order to build that buffer. And then as time goes, you can start to increase the risk because you have enough buffer to work on. So that's first thing you can do. If I'm diving in just a little bit to that risk management mentality, then what I'm doing, I'm taking, let's take some numbers. I'm gonna put on a notepad just to write it down here. Okay. So let's say I have $1,000 to lose in a day, right? Let's call it DL, daily loss. So instead of risking the full daily loss in one click, what I would do is say, okay, I'm willing to risk 30% out of that $1,000, 30%, right? So $300. I'm willing to lose per trade if it's the right trade, right? If it's a A+ setup, it's a great setup. I'm feeling very comfortable to take that trade. What I will do, instead of risking $1,000 right from the get-go, I will give myself the buffer of 30% risk per trade. In that case, 30% is $300, right? Second thing I will do, instead of just going all in and risking the $300 right from the get-go, what I'll do is basically break it into chunks. So that's scaling in or scaling out of the trade, right? So when you hear the term scale in, that basically means that you're breaking that $300 of risk into few chunks. In most cases, depends on the setup and depends on the general sentiment of the market. Because I'm trading mostly the NASDAQ, I will start by getting into a position with a 10% or 20% of that risk. So in that case, I'm risking $300, but instead of clicking and risking it all, I'm risking 10% at first. So in that case, $30, right? First mouse key that I'm clicking, I'm risking that $30. Now it's super easy for me to commit to that trade. So mentally, I'm focusing on that trade. I'm feeling very comfortable with that trade because I'm only risking $30 on my first click. And in total, I know that I'm okay with the $300 to lose. So right now I'm building not just on the technical risk management side, but I'm building it also on the mental side. Because as we know, trading is mostly about the mental aspect of it, right? So in that case, instead of just working on my technical, I'm also building at the same time, I'm building on my mental. I'm going into a trade, I feel committed to that, but I'm not risking too much in order to react to irrationally once the market will move against me or to my favor. So that's my first start. Then I'm starting to add more. So I can add another 10%. So now I'm risking $60, right? Out of the $300 that I'm willing to lose. Now the best part is I can lose 300. So even if the market or the asset, any type of asset that you're trading on, even if it goes against me, I'm still okay because now that I added that extra 10%, that extra $300, $30, sorry. Now that I added that, even if I'm in a loss, I'm still good because I only got, or I still have the $300 to lose, right? So I'm risking 60 out of the 300. Now I'm adding more, 10% extra. So let's say, and it's not working, right? It's not going into my direction, but it's still within the parameters that I'm willing to risk. Let's say now I'm losing $90 out of the 300. So up until now, I added 3 times. I'm still risking a tiny chunk, like third from what I'm willing to risk. So I got plenty more to add to my position. Again, even if it's in a loss, because I'm still not crossing that $300 mark. As long as I'm not breaking that rule of $300, I'm good to add anytime that I want in any type of way. So I'm sticking to that 300 and I'm breaking it to chunks so I can add more and more and more to the position. That way, I'm giving myself enough space for the price to go against me, but still stay within the area that I want it to stay. And when I'm adding more, I'm not risking more than what I'm willing to lose. I'm still risking the same $300 that was there in the first place. So I can add another 20%, right? So that's 60. So now I'm in a loss, but still within the boundaries that I set before. Once I'm handling my trading that way, and once you'll do that, you will see an automatic improvement in 2 things. One, your mental aspect in trading will off the chart. I mean, your state of mind will give you so much flexibility. It will give you so much comfort. You will feel comfortable in your trading because you know that you're not risking the full $300 that you're willing to lose in the first place, not by one click, right? The second thing, because if it goes against you, the thing is that totally fine because you're only in a loss of $60 or $90. So you don't feel that tension that in most cases you will have when it comes to trading and seeing your P&L goes very negative, right? Even if the market will go against it dramatically, at the end of just losing $30 or 60 or 100, it's still way far from that I'm willing to lose. So that's first aspect of trading. The second thing, you will see an incredible increase in your success rate because you're giving the chance to the market to work. And when I'm saying the market is obviously could be any type of asset that you're trading, euro, dollar, whatever it is. once you give the trade the chance to work, and you're not waiting very patiently or waiting very impatiently to see that it's working to your favor, and you give that space, you can now see an increase of that success rate. And this is why we shared, obviously, my chart, and I'm going to show you it as well for those of you who didn't see that. So here it is, right? That's the hyper growth. Again, 160. I'm still down $400 until I reach that 320. And then the idea is that this is the chart, right? I started at September, and then you can see the increase of the chart. I know for myself on my personal account, and like I said, I've been trading for a while, and also on other funded trading accounts that we have on Tradepool or even the 5ers. In most cases, you won't see a chart like this, right? You will see a lot of choppiness, maybe some trends. In my case, because I'm handling it that way, the way that I just showed you about the risk management part, I'm right now at 89% of success rate, because I'm giving the trade the chance to work. I'm not risking too much at the beginning, and if I'm right on the area, that like the level that I want to trade, and in most cases I will, because, and I guess most of us can, because at the end we're talking about supply and demand areas, so it's easy to see them. And once I'm giving the chance to the trade, to the account to start, to the trade to start working, I can go and reach those numbers of like I said, 89% success rate. The equity is 275 because I didn't withdraw any of my profits, so I still have those profits in, and that's basically added to the credit of the account. This is why you see 275. The account right now is 160. Once I'll reach $400 extra, I will go to the 320. And the equity will increase as well because I'm not withdrawing my profits. Okay, so before we'll go back to the numbers here, the stats, just wanted to share the screen, like the chart, just to get the hang of it and understand how that way, the one that I'm showing you right now, the one that we talked about, is basically can give you the same results in that way, can give you the opportunity to actually, like I said, give the trade the option to work, actually risking not too much, so you will have enough space and money to work with, and like I said, give that trade a real opportunity to work. Let's dive into the chart and talk a little bit about that, and then go back again to see the numbers and talk a little bit about the stats behind it. Okay, so I'm trading, like I said, the US Nasdaq. I'm trading the index on MetaTrader. These are basically the trades that I made. This is an hourly, I'm guessing. Yeah, let's take the 4. So these are some of the trades that I made along the way from September, actually. These are all the trades. And I'm going to go back to the trading platform or the trading analysis software just to start drilling down and understand how what I'm looking for basically when I'm trading. So first thing that I'm doing, let's take a cleaner chart. First thing that I do is let's go, I'm working on the hourly chart or maybe a 4-hour chart. But what I'm doing is looking for that major support and resistance levels, right? The areas where everything is going on. So you would look for resistance that became support, or support that became resistance, and many activities around these areas. Now we can dive into that, why it's important, right? We can all understand the behind the scene that's going on. The market is looking for liquidities. The liquidity is found in those specific areas, and this is why the market is like a magnet, is going back and forth and playing with those levels, right? But if we want to keep it on the surface, it's simple. We have an area that acted as resistance. It should become support eventually when we drop to that price. You can take this area, for example, this tiny area from here. It was resistance 3 times. When we broke it, we retest to that area as support, another support, and then broke again up. You can see that reacting many times on many levels. Like I said, I'm using the hourly chart and the 4-hour, but you can do that on even a 1-minute chart. And in most cases, as a day trader, as a stock trader, I will work on a 1-minute chart. But like I said, because I'm running Trade Pool and it's a big operation to run, I won't have enough time in most cases to just sit down and trade a 1-minute chart. So I'm trying to give myself more opportunities, in that case trading the index. And of course, like I said before, you can also trade the QQQ, the ETF for the NASDAQ as well. So you can easily see the one that I'm showing right now, where I'm marking. You can see that that's also a major level, right? This is an area of resistance, became support, broke it, retested, support, broke it, retested, and gone, right? So what I'm doing is just basically looking for those areas where I already see that it reacted before. So I'm not guessing. I'm not trying to say, you know what, maybe if it will or something like that, but I'm actually looking for something that occurred. And I know that if it happened before, it should happen again, because this is how the system works, right? Like I said, liquidity levels, more orders, more field, and such. So I'm looking for those areas where I can start working and crafting my strategy around it. I'm not looking for a specific level. This is not something that you would look for, like, you know, on the dot, like in stocks, when you would look for 50.13. But I'm actually looking for an area I can mark because I want to work around the area. The add-in that we talked about in a few minutes ago, right? So if I will have just one level, I wouldn't be able to add more to the position. But in this case, when I mark area, not a specific line, but an area, I can actually add more to the position around this area. As long as it stays within this area, I can add more to the position. So this is why I'm marking a level and not, or actually an area and not a specific level. So first thing I do is just look for those chunks, look for those places where the market played as resistance and became support, or the opposite, right? So let's take it from September, where I started to trade this specific account. So this is from here, right? And I mark, I'll go back just a tiny bit to see the, okay. So you can easily see that this area right here acted as resistance, maybe even before as support, let's see. Yeah, right? I can easily take it all the way back to here. So it was tiny resistance, became support, broke it, retested as resistance, right? And then became support again. So in that case, in the future, when I'm watching it here, I can say in the future, if the price will drop again, and I obviously don't know if the price will drop again, but I will know that if the price will drop again, then we can expect a support area right here. I mean, that's ABC for trading, right? That's super easy. Anyone that learned the basic of supply and demand can understand that. So we had a resistance area, became support. A few weeks later, became support again. totally makes sense that we can buy the dip here, right? Now that we are in and we understand that the market did a nice drop, so also increasing the chances for a bounce, a buy the dip move, we can see that the price is dropping. In indices and also in stocks, we have volume, something that maybe in Forex not that common, but you can see that the volume, the number of contracts in that case that switched hand between the buyers and the sellers, increased dramatically at the bottom. That will show us capitulation, which means that sellers are now selling, like the pressure of selling is increasing, but on the other side, buyers can step in and insiders basically can step in and buy this whole liquidity, right? So when the sellers are dropping their shares or contracts or lots, we can now, as smart money, we'll call it, we can now buy, or the banks can buy now at a lower price many of their contracts or shares. So you can see a volume increase. That's the red bars here. I'll zoom in just a tiny bit. Okay, that's the red bars coming in. And that's not just coming in right here, but that's after a major move to the downside. I'm zooming out. Okay, we already made a nice move to the downside. Let's see in percentage wise. We made like 8% down. Okay, that's a nice move in the market. And now we're reaching that support, major support level. So we have a nice drop to the downside. We have major support that we didn't test for a while now. We have volume coming in at the bottom. And then we have the MACD, the MACD. I'm guessing most of you guys already familiar with that. I'm just gonna quickly talk about it for those who are new to that. So MACD is basically an indicator that shows three exponential moving averages. That in most cases, like the default for that, the default setting is 9, 12, or 12, 26, and 9. So the difference between 12 and 26, the exponential moving averages, and then the 9 is the signal line. And what we can see, or what we're looking for, is basically a divergence between what the price will show us, which is lower lows, right? The price is creating lower lows, while the MACD creating higher lows. Okay, so that's the negative correlation. While the market is showing continuation to the downside, the MACD is already showing the opposite direction. So now you have a few parameters that you can use and say, you know what, that makes sense that we will see a bounce from here. Now, of course, I didn't know that it will go all the way up like this. This is a whole other story about managing the trade. But I had a good sense of feeling, or maybe feeling is not the right word, but good sense of understanding that this is the area that we will see a bounce from. A drop of 8%, volume increasing while reaching major support, MACD is in a positive diversion. All of those in most cases will indicate that the price should shift in some way. Again, it could have done maybe a bounce like this and then continue to drop. That's fine. I didn't know that it will go all the way up, but I can understand that this area should act as major support, which means bringing buyers in and pushing the price up to some level. Once I understand that, I can start buying the dip. I don't have to wait completely until the price is, I'll zoom in, don't have to wait until the price is already moving up. That's not what I'm looking for, because I have the risk or the trade system, which is, like I said, 30% out of the daily loss, then break it to chunks, right? As we talked about before, now I can start buying once it drops here, once it's already dropping to that major level. So I'm buying 10%, like risking 10%, and that's $30 out of the 300. Then when it dropped a little bit more, I can add more, 10%, again, $30, still risking much lower than what I'm aiming to risk in the total of 300. Now that I have the diversion in the MACD and the price is starting to decrease or increase, sorry, I can add more to that. So I'm buying at this area of that support level, and I can add more as it goes with me, either once it breaks or once it pulling back and then starting to move and so on. So I can play with it as I want. And this is why I'm always like 99% of the enter with chunks, and I don't have to wait until I'll see a reverse pattern, for example, right? In most cases, most traders will wait until they'll have a full hammer or a piercing line or a morning star, different any type of reversal pattern to jump in. You don't have to do that because you're risking lower than your max loss in that case. So you're breaking into chunks. So once I'm in, I can manage the trade, and that in most cases will be reaching that main or the next major resistance level, leaving some of that trade to run a little bit longer. That depends on the trade and depends on the sentiment, but technically looking to aim to that extra, the next level basically on the hourly chart. So the same I can do at the bottom from the support area or at resistance. Obviously, like I said, and as you saw, the price declined, and then I'm looking for that, right? So the same concept, the price moved up, and I'm looking for that main resistance levels. So I can easily mark this area right here, right? This is a great area. Support before the drop, retest as resistance, dropping all the way. Now we're reaching that back, right? I'm not looking for that middle range stuff. I can easily wait more and more until I'll get to my specific point. And this is obviously also something that we need to keep in mind, the patience that we need to have in order to wait for the right setup. You can easily drop to a lower time frame and look for those tiny little moves, and that's fine. It could also work, but as long as you wait for that major support or major resistance, then you will give yourself the best way or the best outcome that could be, at least on the success rate part. Because I know that, or I'm assuming, as I saw in the past, that this one should react as resistant again as it reacted before, right? So I'm going to that direction. I can see if I traded this, but it makes sense to me that I did. Started to build my position. In that case, it dropped. If I entered and I didn't have enough risk that I'm putting on, I need to wait until I'll get to that second phase to add more and then to take my part. And also in that case, as you can see, it did drop, not crazy as it did before, but the idea is the same because I'm, again, handling my trade according to the previous support or resistance levels, like taking the out or scaling out of the account. Same here. We have a major resistance. We broke that, retested. This is a classic way to get a classic area to get into the trade. I don't have to wait until we see the bounce. I'm buying as we go into that dip. A major dip in most cases will show us a bounce, as we previously saw in all those dips, major dips, bounce, major dip, bounce, major dip, bounce. Every time you see a major dip, you can see a bounce. It doesn't have to see, it doesn't mean that you will see a huge increase after that. It could be just a tiny waves to the upside. But once I understand that, I can also build my position according to that. So a major drop, buying around this area, adding to the position, and then taking some out. Okay. So if I'm going, I want to go back to the MetaTrader and maybe zoom in a little bit so you can see. Let's drop to the 30. Okay. Now this is a classic example of something else, but if it's already here, we can talk about it. So for example, I took that, sold that from the top. Again, a major resistance, if we're going back, so that's a major resistance right here. Also after a major drop in that case. And we will go in a minute to the trading analysis chart, and just to show you what was the thought around it. I started to add, let's zoom in a little bit. I started to add here, you can see, I hope you can see that, but there are like 3 or 5 entries here. And then when it dropped, I added more, added a little bit more, and then got myself out. Of course, now that we're looking at it, I could have made much more than that, but that's totally fine, because this is how trading works. From time to time, you will have great trades when you will enter and exit right on the dot. And from time to time, you will have those situations where you actually took a tiny bit, and then what could have happened. In that case, I closed that trade, and I reached that scale, that profit that I needed to do, the $16,000. You can see it here, hopefully. My face is covering that. It's on the right side. So it's $16,000, but I didn't take into consideration the swap and the fees. So I'm actually short by $400. Going back just a little bit. Okay, this is a great example of what we just talked about. So you have one entry here. Thanks. This is the 16,000 that I talked about. So I saw 16,000 and I closed that trade, the previous trade we just talked about. But I didn't pay attention to the swap and the fees, so I'm actually short $400. This is a great example of what we exactly talked about. Entered here, added a little bit more here. So this is the area of resistance that I took from the hourly chart, as we saw previously. So added one chunk here, the other one here, and then this whole area is still the resistance area, the same place where I put my blocks, and basically that triangle or rectangle, and waited for that to play in this level. So once it bounced to that and volume came in, as I told you, a volume that means the opposite direction, basically. So it showed a lot of traders are coming in and buying. And once a lot of traders are buying, the big money, the smart money, can actually sell their position easily because there is a lot of liquidity. So in that case, adding more to this position and then taking the profit here. And in most cases, if we're going back, you will see the same thing. Sometimes it will be, this is also a great example. So buying after a major drop, buying all those blue arrow, and then another drop, still within the risk parameters, within the risk area that I marked before. And then I just need to buy it in chunks and give a chance to the trade to work. Because going in all at once with 100% of risk basically means that you know that right now the market should work for you and should go to your favor, right? And that's pretty much impossible. You got to give the market, the asset that you're trading, you got to give it the option, the trade, got to give it the opportunity to work for you. If you're so tight with your stop loss, if you just getting in and expecting it to work immediately, in most cases it won't really work for you, because that's insane to have that ability to click the mouse key and that's it, it's working. So once you open that space, you open that stop loss, and you're breaking it to chunks, you give the trade the opportunity to work. And if you write on your analysis, which in most cases you will, because you probably experienced that many times, you mark your levels, you do everything perfectly, you enter the trade, you lose on the trade, but you actually seen after that it worked perfectly, right? I'm sure that any one of you guys that been trading for even 3 months saw it tons of times. You do everything perfectly, but the execution part or the trade part didn't go well, right? And the reason is that most of us could easily analyze the charts because it's not big of a deal in most cases, right? After doing it 3 months, 6 months, a year, it's a technical thing. You can understand where is the support, the resistance. You can look at the chart, you can look at the waves, see how aggressive are the buyers, the seller, all of those things. But the problem is that we don't give enough space to the trade to work. Once you do that, it's super, I wouldn't say super easy, I'm sorry. It's much easier to trade on the mental side, and also, and once you have the right mentality, you will have the right result. So that's the same concept here. I'm adding to the position. I'm still within that $300 mark as mentioned before. So again, I'm adding that, maybe if someone missed that. Instead of risking $300 right from the get-go, I'm actually adding. So this is $30 risk, $30 risk, another 30, 30, 30, and so on, adding to that position. And now when it's bouncing up, I can start claiming my profit, basically. So I don't need to be right all the time. Actually, it don't have to be, in most cases, it don't have to be right from the start. And that's the best thing about trading. In that case as well, adding twice here, still working inside of my area. Going back and looking at it, I should have had a little bit more probably around this area too. But still, as long as it's within my risk parameter and within the area that I'm looking at and understanding that this is the resistance area, I can play around with it and then cover once I'm getting closer to the support level. Again, you can see a few days that I'm not trading at all, just because two things. Once, I'm a little bit busy with what's going on here, but besides that, I'm waiting for that moment to enter the area that I want, because then I give myself the real opportunity to take the right place or the right trade. Adding to that position here at the bottom, it bounced, I closed it, adding or starting to short it from here, adding more, and then close it. And these are all the same as I just showed you on the other platform, which is basically looking for that major resistance level after a nice pullback, after a nice push up, major resistance from the starting to add to the position, giving myself the full opportunity or the trade, the full opportunity to work, and then covering once I'm getting into that area of support, resistance, and so on. Same goes in most cases. You will see also here a drop, adding. Again, all this area where I'm adding to the position is basically an area where I'm risking what I'm willing to lose. I'm not risking more than that. As you can see, in most cases, my entry at the beginning level is 0.2 today because the market is super volatile. In most cases, I would start with 0.3 or 0.4. But in that case, in the last 2 months or so, 3 months, the market was super volatile, still super volatile. So I'm starting 0.2, adding to the position, and then once it bounces, I can cover that. Alrighty. Before I go and see your questions, let's dive in again to that area or that hub. For those of you who are not familiar, so every trader that joins us will get his own hub, his own dashboard. You can track your stats. You can see the progress, of course, on your evaluation, and of course the funded account. By the way, right now we are running Christmas promotion, so go ahead and check this out as well. So diving in a little bit to the stats here, interesting to see. In most cases, I'm a short seller, like I'm a bias on short in most cases, but in that case, you can see that I'm like 50-50, just a tiny bit more in short than long, because again, that's about opportunities and what the market will present. I don't know where the market is heading. I just know that if it will reach the area that I marked, I can go into that trade mode and the trade management that we just talked about. 92 in profit, 11 in loss, 103 in total. Some other numbers that you can see that for me are very impressive is the profit factor, which is almost 11, and that's a great number to work with. And again, with the almost 90% of success rate, and that's about it. The only thing that, as you can see, it's all going up except from one. I actually had one big move here, which I held my trade a little bit longer, but except from that, they are pretty much similar as you saw, the bounce from the bottom, buying all around, and then just covering once it reached the resistance. You can play with it. You can take the numbers and the stuff that we just talked about and implement it on your trading style 100%. So for example, if you're doing pullbacks, right, and you don't want to wait for the drop, you're just doing pullbacks. So you're looking for one big move to the upside, then a pullback, right? And then you want to join. Instead of waiting for that pullback to stop and start moving forward, you can start buying that pullback before you even see the move up, right? You're buying that pullback, but you're buying it with chunks. Once you do that, again, you give yourself so much space, or you give the trade so much space to play around, to take some liquidity, the stop hunting, all of those things, and then easily wait until it works to your favor. So again, mostly NASDAQ trading. I guess in this account, it should be only NASDAQ. Buying, selling, and such. But yeah, I guess the best part in that case is just feeling more comfortable to trade like this. And like I said, I've been trading for a while, and I traded tons of strategies, tons of ways, day trading, swing, stocks, futures. I did also Forex for like 4 months. It was great, but it wasn't my thing. And the best part is in trading is that ability to manage that trade, the ability to control the outcome of the risk. And I guess if I can leave you with one tip on that, is just try to break that risk into few chunks. Say you have $1,000 risk per trade per day, break it, like I said, 30% risk per trade, and then break it to chunks. Once you will do that, maybe it won't get you to what you're looking for super fast, right? I started this in September. We are at the end of the year, so like 4 months or so. But once you'll do that, it will give you the ability to really control your outcome and not just be a one lucky trader or a gambler in your trading. That's it. I think on my side, I will go over some questions. If I'm missing something, feel free to drop them in the chat again. And let's see. Yeah, 100%, Harsh. It's not an easy one to wait for that best trade, but I'm assuming, try me. I'm assuming that even if you won't wait as much as I did, because I did have many other opportunities along the way. I just didn't have the time to really focus and trade. So even if you won't wait so long, with that risk management and the way I just explained, I'm sure you will see great result either way. The more you wait for the perfect setup, the more success rate you will have. But again, 89% success rate it's very high for even for me. I used to work around the 63% back in the days, as I said. But so I'm guessing even if you won't wait for the perfect setup, you still find a great success. I started, what was the starting account size? It was 40,000. And again, now I'm for $400 to reach 320. You took 11 losses, but I can't even see them on the graph. Yeah, they are very, very small. You know, I can try to scroll here and maybe we would look for. I think that we can try to scroll here and find those. Here it is. Okay, that's just cover. But here you have 150, 130, 120, 120. Very small losses. I didn't even take the like you said, the 300 in total. So in most cases, because the thing is about this, let's go back to the chart for a second. Let's say I entered. Let's take this example, right? Let's say I started to buy the dip here, but it dropped down below it. Okay, it didn't stop here and it continued to drop down. Now the next support level, let's say it's over here. I don't have time, patience, and also the risk wise to stay and wait until we get to this level, right? So in that case, if I'm losing $100 or 150, not the full daily, not the full risk that I was willing to lose, but the next major level that I can work with is open. It doesn't mean that I need to stay with it until it dropped to the next level. I can easily take myself out of that trade and wait until it will reach that level, right? So this is why. Yeah. Alrighty. What else do you got? How many accounts do you breach? You mean failed? I didn't. Like terminated? I didn't have yet, you know. But I didn't terminate any account yet. Right. Give it a space to work. Daya, when you're asking, you also said you need to give your trade room to move. Give it. I mean, if you are here in this area, right, this is the full area that you mark. So you can give it the space to work with that area, right? But once it crossed or broke that area, it's not your trade anymore. This is not what you planned. You had the assumption that the price will decline, reach that area, and then bounce because of the rest of the stuff that we talked about. But if it's not within the area that you mark, then it's not your trade. So get out of that trade, right? Okay, cool. How many trades you take per day? So again, in this case, as a day trader, when it comes to trading stocks, I will take about 3 to 5 trades. In this specific account, it's probably 1 trade a day. My holding time, if I'm not mistaken, 16 hours, almost 17 hours. So I'm taking a trade, wait for it to work, add into the position, let it, give it that space that we talked about, and then close it once it reach my either profit or loss. So in this case, it's just like 1 a day. Again, we're talking about almost 4 months, 103 trades, right? Cool. Alrighty. Okay, let's see what else. I'm not putting my stop loss in. So there you ask about the stop loss. I'm not using like a hard stop loss in the system because again, I'm adding to the position and I'm not risking it all once I'm entering the position. So technically, I don't mind to let the trade go against me as long as I'm not crossing the max loss that I'm willing to take per trade, right? Okay. Yeah, one trade, I'm just scaling into it. Yeah, exactly. Yes, exactly. I'm adding to the position even if it goes against me. As you saw from, look here, right? I entered here. I took a long here in this area. Added more. Added more. Sorry, this one is a cover. This is a loss that I took. But then entered here. It goes against me. But because it goes against me with a tiny loss, right? When I took those buys and it went against me, I didn't lose 300, right? Those not really the numbers, but just to get the hang of it. So I didn't lose the full $300 per trade. I actually just lost 30 and another 30 and another 30. Like open P&L was down $90, right? Out of the 300. So I wouldn't mind add more to the position because I'm not risking more than 300. One of the biggest mistakes that traders do when it comes to adding to a losing position is that they go in risking a full 100%, right? And then when it goes against them, they add in more, 50%, another 100%, and so on. And this is how you blow your account. But actually, in this case, you cannot really blow the account because you do have a max limit. And you don't start with the max limit. You start much smaller than that. So if this is your 100%, the $300 is your 100%, you're actually starting with 10%. So that's $30. Then another 10% and so on. Alrighty. Perfect, trading the same way. How long it took me to get to that from 40? If I'm not mistaken, it was a year. It was September last year. But again, I'm not trading. I'm not trading full time on this, right? So this is something that I'm guessing, at least because I didn't do that. But I'm guessing that if I would have traded like consistently every day or every few days when I found my setup, it would probably been a little bit faster, but just too busy with other activities here. About how you determine the 30%. So basically, what I'm doing is understanding what is my my daily loss, right? For example, if I'm a day trader, I'm taking my daily loss or my daily pause for those of you trading with us at Trader Pool. And let's say it's $1,000. And now I'm saying for the best setup, like the A+ setup that I'm willing to take, I want to risk 30%, up to 40% in most cases. Right, so this is how you take it. If it's not day trading and you want to go with swing, you will do the same concept but for a week. So for example, what is my full week allowance, right? And then you take 30% out of that, for example, and break it to trades. Yeah, so you know what, I do have a video like 20 or something minutes about it. Let me try. It's not on our channel. It's a friend of ours that from time to time will go. I have a few videos there that I did with him on different occasions. Let me try to find it and put it in the chat here. Just a tiny bit. Okay, I got it. And if you want to, this is a great channel that if you want to also just listen more about stuff that I did in regarding to like analysis and stuff like that, feel free. That's the video about risk management. Do you scale into the position when it goes your way? Yeah, Abdi as well, also doing that. So if it goes to my favor, let's say, let's try to find something here. Okay, so in this case, right, it went down, bounce, had reached that area of resistance like the previous, basically pulled back. And now I can add more to the position, even if it goes to my favor, right? So because let's say you enter the trade, very similar to what we see right now. So you enter the trade and right away it worked, right? Dropped like crazy right from the get-go. But because I didn't have enough risk put on at the beginning, I can't just close the trade here, right? I gotta wait until it either dropped majorly lower or bounce back so I can add more to the position. So I always look to add to the position even if it goes to my favor, only when basically I don't have enough risk put on when I first got into that trade, because I'm taking 0.2, 0.2, 0.2. So in that case, if I only entered twice and I only have 0.4, I need to add more to the position so I can start seeing some profits. Cool. Okay. What else? For one trade idea, you have a limit to your scaling positions, like 5 entry. Yeah, so not this one. Yeah, thanks. So in that case, I don't have max entries, but in most cases you will see me play around from 3 to 8 entries, like executions. That will be in most cases my the area that I will play with. For example, you can see that in most of the trades, right? So this is 1 and 2 and then 3, and this is a tiny one, but there is like 5 here, entries here, and then the cover. So in most cases it's between like 3 to 8. Here you got 2 and then the drop. But it's not about the number of entries. It's about how much you put in a risk per entry, right? Because if I going back to this, if I, let's say, instead of risking 10% at the beginning, I would have risked 20, right? So now I only got to complete it, I only got 5 to complete the 100% of risk. So so it's just a matter of how you start your trade. I don't use Fibonacci, no, but I mean, you can use that. That's totally fine. Again, it's not about the system, like the strategy or the indicators. I'm using, like I said, the MACD to add a little bit more value to it, but the idea is that once you give, like, the state of mind, once you give your trade the opportunity to work and you scale into that, you will see an increase in your trading no matter the system that you're using, right? in most cases, I will start with the hourly chart, analyze it on the hourly chart, the time frame, maybe 4H, but yeah, in most cases it will be in the hourly. Alrighty, what else? BE start, like when entry goes your way, you first set to BE. No, I don't do that. You won't see me. First of all, like I said, I don't use a stop loss, so I don't put it. Don't put a hard stop loss in. Of course, I have a global stop loss like the 300 that we mentioned, but I don't have it hard in the system. And even if it goes to my favor, I won't go to break even and put a stop loss, or even not in my thoughts, because yeah, thanks, the break even. So even if I'm not using, like I said, I'm not using the hard stop, but I won't put any stop loss in, because the idea for me, like on break even, because the idea for me is either close it with a profit or close it with a loss. This is, I'm like, this is the state of mind. And again, it works for me. I'm sure it will work for everyone that will use that mentality or the risk mentality. But the concept is basically, I analyzed it properly. I feel comfortable with what I did on the chart, like understanding that the price should shift to any direction in that case, let's say short, drop. And then I want it to work, right? I'm looking for, once I analyze everything, I'm looking for the win. I'm not looking for a defensive mode, a more attacking mode, because I know that I prepared myself enough to win on that trade. If I won't win, that's fine. I will take myself out of that trade. But my state of mind at the beginning will be, I'm looking to make this a profitable trade. So I'm not looking to defend my trade by putting into break even and such. Okay. Can you share the link to your YouTube? Sure, yeah. It's called Trade a Pool. Trade a Pool is a sister company of the 5ers. We've been operating Trade a Pool for the last 2.5 years, and this is purely for stock traders. Of course, as Forex traders, you can also shift and move, because at the end, as traders in general, we're looking for opportunities. So if there is an opportunity in the Forex market, that's fine. If we have an opportunity in the US market, that's great as well. So it's not really about the market. Of course, you need to learn a few tricks and tips about the stock market. Like on the stock market, we have gaps and we have earnings and other stuff like that. So, and this is something that, of course, we teach you on our platform. Once you're in Trade a Pool, if you go to tradeapool.com, of course, you will learn about our funded programs. We have 4 of those. We have a special Christmas promotion as well this week, so you might want to check this out as well. Okay. Show us one of your recent trade with the risk. Yeah, that was everything I'm showing you now is recent. I mean, from the last few months. This is the last trade that I did. Like I said, I took that trade, but I quickly closed it because I reached that $16,000 that I needed in order to pass to the scaled account. But I didn't take into consideration the swaps and the fees, which led me to 15,589, which is almost like 400 short. So I basically entered here, then added a little bit more here, and then covered here. And what of the stuff, let's go back in the chart and see that. It was December 19, so it was right here. Okay, let's analyze that before we finish here, because that's also a great lesson to talk about. So basically, I'm seeing the chart like this. Reached a new high, NASDAQ hourly chart. Reached a new high, dropped like crazy, bounced from those support areas, right? This whole area of support. Bounced to resistance. Look at that area. All right, this whole area of resistance one time, support, broke it, retest it. And now I'm saying to myself, okay, obviously it can go up or down, but I'm saying to myself, let me zoom in a little bit. I'm saying to myself is this, we are at a major resistance level that played very nicely previously in the last few days. The MACD, if you look at it right here, it shows us that it bounced very strongly. Can you drop the question, please? Someone in the back, thanks. The MACD pushed very nicely to the upside, but the price didn't do as much, right? If when they correlated those two, you would have seen a major move on the price and a major move on the MACD. But in this case, when I'm looking at it, it did bounce majorly, but the price didn't. So the price reaching major support or major resistance, while the MACD didn't do as much. So what I'm expecting it to do is that the price will decline, drop to a new low, and the MACD will basically will create the divergence that we talked about, right? So it should have been like this, a drop, but not as low as the previous low. So basically creating two higher lows, while the price will drop and create two lower lows, right? One low here, another one here, and the MACD is creating the opposite. So this is one thing I imagined that should happen. We reached a major resistance level. The MACD show us that it might shift, and in order to shift, the price should decline again. And looking back, I'm saying to myself, okay, what is the next major resistance level? This is the low. I don't know if you see it on your screen, but this is the low, right? So what will be a place for the market to stop? There are two places. One is this one, this whole area right here, and the other one is this one, the previous resistance. Let's mark those two. Okay, so this one and this one. So I'm saying to myself, it makes sense that the price will decline and reach those support levels in order to create that positive diversion in the MACD. Now again, maybe if it wasn't just to reach the target of the scale account, I would have waited longer. But once it dropped, I started to short it, and once I saw the drop, I covered it quickly. At the end, it dropped like crazy on the dot. First of all, to that support level, dropped a little bit more, another drop, and you can see the MACD did what I thought it will do, to lower highs, while the price is declining and creating two lower lows, and then the bounce. Okay, great. Of course, when you start trading first of all, different platform and then a different market, you need to get used to the stuff around it. We do have not tons, but we do have a good chunk of Forex traders that started probably just like you, didn't trade at all on stocks, but just decided they want to give it a shot. Probably you need a few attempts in order to get the hang of it, not just the rules, but also in general about trading stocks. And we do have great videos that we put up lately on the like tutorial videos on the trading platform. You can listen to the funded interviews to get the feeling of what they're saying and how you can trade better. And we are working right now on a few series of videos as well to take you from Forex to stocks. So basically explaining the differences between trading Forex and stocks, the pips comparing to shares or comparing to cents, and the terminology for stock traders and such. Really short videos that explain everything. Luxury, yeah, this is live, so you will have it. You can just run back, it's recorded. You look for trades only during the US session? No, not at all, Jake. I'm waiting for that trade whenever it comes, you know. If I'm in front of the screen and I have the time to just focus on that, I'm waiting for that trade. So I will execute that trade no matter if it's in the beginning of my trading day, the beginning of my day, or in the middle or the evening. So not necessarily during the US market. Which software are you demonstrating? So this specifically is it's called Think or Swim, which is a broker, which is a platform of a broker in the US, Charles Schwab and or TD Ameritrade. And I'm looking at the NASDAQ currently. Yes, the NQ and the NASDAQ. On MetaTrader, I traded the same as you guys. On MetaTrader, on my 5ers account, the NAS 100. Yeah, I just like to analyze my charts here. On the trader pool, you have the trading platform that we use for stock traders, which is this one. You can of course customize it as you want. You have all of them, basically the stuff that any stock trader will need, which is level 2, like market depth, Superdome, a lot of the cool stuff that we use. And like I said, we have full videos tutorial, like 17 of those, short but very accurate on each one of the stuff that you can do within this trading platform. So that's pretty easy to understand and work with. And I guess yeah, let's see if we have any questions. If not, we'll wrap it. I mean, again, Silva, it depends really what you're trying to do and for what case. You know, I traded the MetaTrader just because the account is there. I didn't feel anything wrong with it because my analysis was not here. All of my analysis was on the Think or Swim platform. So I just execute the trade. So I didn't even have to look at that platform technically. So just clicking the sell or buy buttons. Time frame is an hourly that I in most cases will use. Asking about the gaps. Yeah, there are great strategies about trading gaps, and you can definitely implement that. You can use the same concept. Obviously, in Forex and indices, you don't have a lot of gaps, right? But once you have it, you can use the same concept, the same idea of using the gap as support or resistance. Yeah. Alrighty, cool. All of the stats are here, Raj. So the profit, the loss, all of those things are right here. Yeah, just use the right tools for you. You know, if you just need to execute the trade, so just execute it where you need to do that. But for the analysis, if you feel more comfortable of doing that with some other platforms, that's totally fine. Alrighty, guys, it was a pleasure. Like always, appreciate your time. Hopefully, you learned even a tiny bit from what we just talked about in the last hour and a half. And yeah, feel free to give it a shot, at least few times, just to get the hang of it. I can seriously suggest that and say that, you know, if you at least do that breakdown of the scaling in part, you will automatically see increase in your trading, like I said, on the mental side and also on the technical side as well. So yeah, keep it up, don't give up. If you like what you're doing, like trading, if it's your passion, stay with it until you find a way to make it happen. Alrighty, guys, appreciate it. We'll be in touch. Take care for now. Happy holidays.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.